Here on The Colour of Country Life, we're chatting with Nick Crundall from Market Check. How are you, Nick?
I'm very well, thank you. Thanks for having me.
Not a problem. We often catch up with Tess Walsh, but she's having a bit of time off, so we'll check in with you and have a look at how things are looking across the grains sector. First of all, we heard there was still some harvesting going on in the Riverina even as early as this month. Have we got all the crop in everywhere across southeast and south of Australia?
I wouldn't say all of it. There is still some guys that are going, which is incredibly frustrating given that we're approaching the middle of Feb. But the large majority of guys are now done and finished. But yeah, there's still a small tail of guys in certain areas that are still unfortunately not able to get on the paddocks and we'll have to keep going and that's causing a few logistical issues. But yeah, for the large part, all said and done for the 2021-22 harvest.
And there were projections of possibly even another record crop from A-Bears across that season. A little bit of worry on the wet front when it comes to, say, the Riverina or even northern parts of Victoria. We got a bit of a figure yet or indication when we'll know what the crop size actually was?
Yeah, we'll get the Feb report shortly out of A-Bears. They're typically quite slow in terms of increasing crop sizes. They don't move particularly quickly. They sort of edge it up over time. I think, broadly speaking, from a market perspective, everyone's baked into the cake that it's a record. That's predominantly built off New South Wales and WA's crop size. Northern Vic was okay, but it wasn't anything sort of too memorable. And then, we had some test weight washed out of some of the crops in southern New South Wales in the Riverina area, and those crops were good, but really the big production came out of places like Walgett in northern New South Wales, and then WA had a monster crop. So it will be a record. Whether A-Bears recognises that in the near term is yet to be seen.
All right, well, across South Australia, Victoria and New South Wales, how are things looking right now on the pricing front?
Yeah, pretty good. I'll start off, I suppose, in the Riverina. It's getting a nice pull on prices from the delivered Melbourne and delivered Bendigo markets. There's a lot of logistical issues. There's a freight shortage, and weather is obviously causing a few problems. So there's some really strong demand into the ports down in Melbourne, which is certainly where you want to be pointing your grain if you're in that Riverina area. You've got SFW delivered Melbourne at sort of $3.40, $3.45. ASW probably another $20 or $30 over that, and then H2 sort of over $400 a tonne delivered Melbourne. So that's really soaking up all the Victorian grain that's available for delivery, and as I said, the Riverina area as well is benefiting from that sort of demand point. And then if you move across to South Australia, the highest prices in Australia. Yesterday, H2 was going through in Port Adelaide at $4.15, $4.16, and then you go down to the feed grades that are about $3.55. So there's a big premium for South Australian grain over the rest of Australia, and that's continued over the last couple of weeks, and it's getting bigger as these export shorts.
What's driving that?
There's a lot of exporters that are trying to front-end load the exports out of South Australia. The crop wasn't as big as on a relative sense, so there's not this oversupply versus export capacity like there is in the East Coast. The East Coast has just got too much grain around it at the moment versus how much it can ship, whereas South Australia kind of doesn't have as bad a problem. And there's just a few guys that have export sales on and that are looking to cover, and they're struggling and they're pushing the price up. So SA will remain a premium over the rest of the country for the rest of 2022. It's just what level of premium, because at the moment it is quite a significant premium over New South Wales, Victoria. It's quite substantial. So it'll be interesting to see how that plays out.
All right, and do we have a bit of a metric on the canola front? How have things gone this year? There was a record level of plantings, I believe, and the moisture, the rain played a little bit of havoc with harvest and the crop quality, I understand.
Yeah, I mean, there's always going to be issues here and there. I think, broadly speaking, from a national sense, and I know there'll be people around the traps certainly listening on this who wouldn't have had as good a season because of issues with test weight, a soft finish, and a few other things that did go wrong in isolated areas. But broadly speaking, it was by far a record canola crop in Australia. We've kind of never had a crop nearly as big as we produced this season. It'll be somewhere around 6 million tonnes. So it's a big crop in canola. Prices have suffered because of that, but given the overall very bullish sort of oilseed complex offshore, the prices are still very strong. You're still getting, north of $800 a tonne for canola, and if you combine that with record yields and record production, it's been a very good season for canola growers this year.
Now, that's the prices at the moment. Just in terms of, I guess, futures, is that where we're seeing most of the, pricing in of risk premiums when we're looking at, the Ukraine concerns and that sort of thing? Or are we feeling a bit of that impact already on the current pricing market?
Yeah, look, it's the Russian-Ukrainian conflict, for lack of better words, was, the market sort of freaked out about that, and it would be very bullish to wheat prices if there was an all-out conflict between those two, given they're such big exporters in the wheat market especially. But it seems to be de-escalating, and some of that geopolitical risk premium that was being put into the offshore prices has been extracted again, and so it's a bit of a hold and wait to see what happens. So it's certainly a risk to the upside that Putin does make, a bit of a grab for Ukraine, but everyone seems to be a little bit more comfortable than they were a few weeks ago about that. Prices now, more broadly speaking, are pricing in how important the spring period is in the Northern Hemisphere. So we've got, at the moment, we've got South American corn and beans that are in a bit of strife. That's certainly helping wheat prices globally because soybeans and corn have been rallying. But really, we're just trying to get to a point where we're comfortable price-wise going into the spring period for the Northern Hemisphere wheat crop, and there's really no room for error for any droughts to emerge offshore, and the market's just pricing in a bit of weather risk premium to the prices to ensure if that does happen, that we're appropriately priced.
Well, Nick Crundall from Market Check, good. Thanks for that comprehensive wrap. Much appreciated, and have a good weekend.
Yeah, same to you. Enjoy it. Thanks.